Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands, May 29, 2015, and this is the Daily Report for Gold and Silver, our weekend review. And what an interesting week we have seen in the markets. Overall on the week, gold absolutely traded lower, currently trading at about 11.90.10. That puts it up about $2 on the day, low 85.70, high 93.30. Silver also trading higher on the day, up roughly 5 cents at 16.72, low 64, the high 85. When we take a look at the dollar, we can see that it's absolutely had a pretty strong week. You can see that right here. This is a weekly chart on the dollar, but compared to the moves that we saw last week, of course, nothing like that. Now, on the day, as you can see on this daily chart, we are trading lower on the day, off about 0.08 points at 96.88. When we look at our channel lines on our daily chart, we can see that it has come down, but down to about the mid-range. And then when we look, of course, at our moving average, you can see we had our nice cross at the bottom, and it's still within the channel itself. So overall, we are still under the assumption that the dollar will be stronger throughout next month. Some of the other markets that we are looking at in terms of its effect on the precious metals markets, crude, tremendous upside surge today, up almost or over 4%, but almost $2.50 on the day, over $60 per barrel again. When we look at our daily, we can see this nice uptick in the market itself. We'll look at oil, time permitting, in a little bit, but let's take a look at some of our gold studies. You know, all week we've really been going over our short, intermediate, and long-term forecast in gold using the different studies that we have incorporated throughout the entire gold forecast history, Japanese average charts, Elliott wave, candlesticks. We've added, of course, MACD, which is something I've used over the last 30 years, along with momentum. We're also looking at shorter-term charts, and I'm trying to give you specific targets of where I think this market's going to go over the next day to 2 days on the short term, interim term, really a week, week and a half, and then a month on the longer term, to just put some sort of conceptual model in front of you so that you can act accordingly. And if you recall back, I believe on Tuesday or Wednesday, I think it was Wednesday, what we noticed on these 240-minute charts is that we were going into extremely oversold scenarios. You can see this on the MACD, and you can see how this momentum is really moving up right in here, and waning, I should say, that negative momentum moving up to the unchanged area. And when we saw this occurring, we had one false positive right here, but we did get a very, very nice cross. And when we got this cross, I believe the market was trading at anywhere between 82, 83 in that area. And at that time, I really believe that we should see a small pop in the market, but in the context, in the bigger picture, this would be before, I believe, a fairly sizable drop, and that's because I believe that on our minor count, we'll be heading into our fifth wave. We're currently in our fourth wave, and I'll basically show you what I mean by that. Let's go ahead and blow this chart up. When we do that, you can see that what we're looking at, and again, this is a very, very short term, as minor as we can in terms of a count. 1, 2, this long 3, this 3 concluded roughly at these lows at around 1180, which took us into a counter wave or a wave 4. Now, in terms of a wave 4, typically what you're looking for is anywhere between 50 and 75% the move that you saw from wave 3, which is this wave right here. And so in terms of the areas, this is our first area that we believe it has the potential to move to, roughly the 1190, 1192. That's what we're saying. We have another area right here at around 1200, and my sense is that the uptick that we're seeing right now could take us anywhere between, call it 1195 and about 1205, I think was the numbers that I hit, 1204 here. So call it 1204 on the upside. Now, this in the context of a minor count, though, has got to be taken with a grain of salt, because my sense is that once we complete this wave 4, of course, we're going to go into a wave 5, and the wave 5 should actually have a low that is below this current wave 3's conclusion at 1180. So what I want to do is put the last chart and wave count in context to the next move up, meaning minor to intermediate. We're still looking at minor here. Now, these are half a day candles, standard candles, and there's no doubt we're looking at the very, very same count, our 1, our 2, long 3, and this is the bounce up 4, anywhere between, call it 95 and maybe call it 1204. That's the context of this minor count. Let's now put that into perspective of the intermediate count, or the next count up. And to do that, we've gone ahead and pulled up our daily chart. And on our daily chart, we'll look at our more intermediate count, and we'll start really up here at the conclusion of this C wave right here, which takes us into our 5 count. 1, 2, long wave 3 down, which took us to these recent lows at around 40. And from there, we went into our corrective wave 4. Pretty long count, but we concluded our AB. There's our final C here. And so it appears as though we've concluded wave 4, and now within wave 4, we're now within this protracted wave 5, which will take us to these new lows. But realize, within this wave 5, we're going to get a count, meaning 1, and this is that little pop up right here. 2, we'll get a third wave down. That would be the 5 on that minor. And so the way you want to look at this, and I kind of use the analogy of Russian dolls, where you've got a smaller doll fitting into a bigger doll into a bigger doll, like that. You've got that same kind of fractal quality when you look at minor to intermediate, intermediate to major. And so the reason I want to point out these differentials in this Elliott wave count is you can see what we're looking at very, very short term. Looking for the market to move up, we've given you specific targets where we think they'll move to. You can enter long positions if you haven't already for short-term traders, and you'll look to exit that trade and initiate short positions. As I said, if we see the market starting to top out anywhere between, call it 92 and 1205, somewhere in that area. And if we position ourselves properly, we'll be able to catch this nice wave down, and that should be a nice profitable trade for us. And lastly, in terms of charts and studies for today's show, I want to address the longest term study with our absolute major count in that. To do that, we really need to look at our weeklies. And when we do that, what we get is waves 1 through 5. These are major counts, and they, of course, 5, 5, and 5. They all culminate really at the record top here at 1920. From there, it's still a bull market, so we're basically looking at an A, B, C progression. This is our basic retracement, and we move back into, in essence, a bull count, because there was nothing to signify that we were in any kind of a bear market here. 1, 2, 3, 4, and 5, but an absolute failure at the 5th, because this is where we in essence had our triple top, and this is where the bear count begins. And so when we go into our bear count here, we've got 1, 2, long wave 3 down, 4, conclusion of our 5th wave. And so that would put us in terms of some sort of a long-term move in our ABC correction period. And of course, an ABC correction is going to be different. This is a bull count ABC. On a bear count, it would be something like A, B, and our final C up would take us a little bit higher, and could take us, in fact, to new highs if it actually culminates that way. It does appear, though, when we look at this, that we're getting some sort of a compression triangle, meaning we're going to probably break again to the downside when we look at these lower lows, and almost a flat bottom. Very, very significant, because we've seen this kind of activity before. But most importantly, those are our different counts that we're looking at in the market. Of course, you really can't react or trade upon these longer term counts, but it puts the shorter term counts into perspective along with the moves that we are looking at. Next week, we're going to be detailing silver in the same way that we've looked at gold with our minor, intermediate, and long-term count. We're also preparing, of course, to launch our new expansion pack, so to speak, or our expansion of the gold forecast into other markets. We'll send you information as that becomes available. We'll probably be offering a sign up for our subscribers at a specially very, very reduced price to let you try it and get involved with that. And that kind of a notification will most likely go out towards the end of next week. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.